Hello my fellow freedom builders and welcome back to the channel. This is Monday morning here from the Building Freedom channel, and I'll give you a quick overview of quite the crazy weeks on the news front, earnings front, and as if things shouldn't be any crazier, then this weekend we got the news that the Chinese Evergrande, the real estate company, is basically closing down. A judge ruled against them and said, well, your rescue plan is not really rescuing enough, so we're shutting you down. So let's start there and then move into the economic calendar, the earnings season, and the all that you can expect this week. First of all, Evergrande, you've probably heard of them. It's a huge company. They are $300 billion in debt. And basically they are built, as with many of the real estate companies in China, built a bit like a pyramid scheme where they are using new customers' money to fund already delayed projects. And since the private citizen in China is not really investing that much in stocks, they're putting most of their money into real estate, which has been a certain thing for many decades. However, it's not so much anymore, and that could be quite devastating for hundreds of millions of Chinese citizens. But the thing is, will it hit the stock market right now? And I know it can sound a bit cynical. Should we really not concern ourselves about the private Chinese citizens? But this is about investing, and I am looking at the effect of the stock market. And to be honest, right here, right now, I don't think it'll have a devastating effect on the stock market. If we are looking at the Hang Seng, the Chinese stock market, let's have a look at a weekly chart here. Maybe you haven't noticed it, but since the top here in January 18, that is 6 years ago, the stock market in China has dropped something like 50-55%. And just over the last 3 years, because it did drop, then it retraced, and just over the last 3 years, it has hit almost 50%. That is a mix of really bad politics from the Chinese government towards the stock market. And it is, of course, also a lot of the news about the real estate market. So the big question is, has most of these bad apples already been priced in? And I think they have. Also, the Chinese government are doing a lot to really stimulate the economy and to help these big real estate companies. And the last thing is, they have actually, just this weekend, I think it is, banned short selling on different sectors and here among real estate companies. So all of that should somehow keep a hand under the market, but no one knows what will happen. If we look at the, where do we have it here? Let's just have a quick look. Here it is, HXC. That is the Nasdaq Golden Dragon China Index, and I think there is something with the 50 largest Chinese companies on the US stock exchange, and that index have gone down by 72%, meaning that most Western larger investors have actually taken a lot of money off the table with the Chinese. So this is a huge problem, and it is the symptom of a lot of things gone wrong in China. But right here, right now, I don't think it will result in a huge stock market crash. But I could be wrong. Let's see what happened. All right, let's jump quickly into the earnings season. And this report from FactSet, you can search it yourself. Just search for FactSet, S&P 500 earnings, something like that, summary. And here we just get a lot of text, but what it says is that 25% of the company as of last week have reported their earnings for Q4 2023. And 69% of the companies have actual EPS above estimates. Now this should sound fairly okay. That's almost, well, that is more than 2/3 of the company. But looking at the 5-year and 10-year average, we can see that it is normally a lot more companies are actually beating their expectations. Also, normally, on average, the companies in S&P 500 are reporting results that are 8.5% above their estimates. Right now, we are 5.3% below. So that is something like, what, 14% difference from to the negative side from the 5-year average. So that is not terribly well. You can dive into the report and see that there are sectors that are generally reporting a lot more above estimates than others, but I'll not go into details with them now. All right. So we have the earnings season that is not looking too well on the earnings. We have the Evergrande, we have the stock market. Now, what about the economic calendar? And here we are in for a hefty week as well. We are starting out now. Today there's not much. Tomorrow we're getting a lot of GDP numbers from Europe. I'm not expecting too much of them. I think it'll be quite of a bad situation here. We are in most countries and the overall euro area, we are either in a recession area or very, very close to it. You can see the year-over-year growth rate here, 0%. So that is very close to going into recession, which is why I think also the ECB will start lowering their interest rates within a few months. All right. Consumer confidence going down also here. It should be exciting to see the consumer confidence in the United States. That can have a lot to do with the election in November. A very high and rising consumer confidence will have more people voting for this sitting president, normally at least. All right, we are going on to Wednesday and we can see a lot of unemployment numbers, inflation numbers and so on. The ADP job numbers from United States, which is a pre-number to the NFP Friday. And then, of course, the big thing here is Wednesday evening, we get the Fed interest rate decisions. Everybody is completely certain it'll be 5.5% again. So I think that should be a certain thing. The big question is, and that is a 50-50 call, will they cut the rates in the March meeting? No one knows. All right, we get into Thursday and we get inflation rate from Euro. We get, of course, the initial jobless claims as always on Thursdays. And we get a lot of PMI numbers here as well. And then Friday, we get the non-farm payrolls from the United States. So as you can see, an extremely busy week. Numbers coming in all over the place. And then we have the earnings. And the earnings, when we're going into, let's just have a quick look here. Tuesday, we get the Alphabet here. That is a Google stock. We get Microsoft. I will do videos about these, both before earnings and after earnings, probably. When we get into the other days, we have MasterCard. We have, let's see, Qualcomm is quite interesting as well. And we continue with Amazon and Apple, I think, isn't that? Yes, that is Thursday we get them. And then Friday, what do we have there? Chevron, ExxonMobil, the big energy stocks and so on. So we have earnings. We have a ton of news on the normal or a bit more macroeconomic scene here. Then we have the Evergrande and we have the overall earnings picture. So believe me, this will be a volatile week, and every time we think we have a direction, there'll be a new number dragging in one direction or the other, and we will be spinning all over the place before we get to Friday. So enough to watch this week. Take care of yourself and your money out there, and of course I will report on the numbers and the earnings and different companies during the week. That's all from now. Talk to you again shortly. Bye.